Hello everyone, and thank you for joining today's True Trading webinar. I'm excited to be here with you. My name is Mohammed Azim from Traders United. This disclaimer: True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I am a certified elite wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of elite wave theory. In addition to my work as an analyst, I am also an author and educator. I wrote Introduction to Elite Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elite Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. So these are the main session goals. Let me talk about macroeconomic events and data releases. I am going to cover previous week's fundamental analysis. The first one is the October 1st ISM Manufacturing PMI related to USA, and my focus is the euro dollar. Next one is the non-farm employment change related to USA. Okay, so let's start with the first one. October 1st, 2025 ISM Manufacturing PMI related to USA. Now, what is the ISM Manufacturing PMI in USA? The ISM Manufacturing PMI is a monthly economic index that measures the health of the USA manufacturing sector based on a survey of purchasing managers. It is published by the Institute for Supply Management, also known as ISM, and serves as a key indicator of economic conditions. A PMI reading above 50 indicates manufacturing expansion, while a reading below 50 signifies contraction, with the distance from 50 reflecting the magnitude of change. Now, the previous number we got was 48.7, forecast was 49.0, and the actual number we got is 49.1. So the pair on focus is the EURUSD. Kicking off the new month and the new quarter, we had a critical high impact indicator for the United States. The ISM Manufacturing PMI released this Wednesday at 2 p.m. UTC time. This report is a cornerstone for gauging the health of the USA industrial sector, with the index stuck in contraction territory below 50. Forex traders were watching closely to see if a rebound was on the horizon. Now, the analysis and review and market action. The outcome, a slight beat but still in contraction. The actual PMI came in at 49.1, which was a marginal beat against the 49.0 forecast and a slight improvement from the previous 48.7 number. However, the key takeaway is that the index remains below the 50 threshold, confirming the USA manufacturing sector is still in contraction for another month. The forex market's initial reaction, a sell-off in EURUSD, indicates that traders looked beyond the minor headline beat and focused on the underlying weakness in specific components. Let me show you the chart of euro dollar. So over here, we got the news. Euro USD first tried to rally it up, and then we got overall bearish candlestick close. This is the daily chart of euro dollar currency pair. So decoding the dollar strength, the devil in the details. While the headline number was only slightly better than expected, the internal components of the report likely told a more hawkish story. The market moving catalyst was almost certainly a sharp rise in the prices paid index, which signals accelerating input inflation for manufacturers. This spooked the market by suggesting persistent pipeline inflation pressures, thereby reducing the immediacy of Federal Reserve interest rate cuts. Additionally, a strong new orders component may have hinted at future resilience outweighing the current contractionary headline. So what actually happened is the data confirmed a still contracting but slightly improving, and more importantly, inflationary manufacturing sector. The knee-jerk rally in the US dollar, which pushed the euro USD lower, was a classic bad news is good news for the USD scenario, or more accurately, less bad news with a inflationary twist. Forex trader interpreted the data as giving the Fed less reason to cut rates soon, boosting the US dollar's yield appeal. Overall analysis and key takeaway is the market received a nascent report. The headline PMI of 49.1 presented a stagnating manufacturing picture, but the strength in key subcomponents, particularly inflation measures, shifted the narrative. The risks were perceived as tilted towards a more hawkish Fed, leading to a US dollar positive outcome. The scenario that played out when we got the PMI 49.1 number with hot subcomponents is the USD is bullish. The data signaled underlying inflationary pressures within a weak sector. This combination delayed Fed easing expectations, providing a strong bid for the US dollar and driving Euro USD down. So the conclusion and trading outlook is the ISM report successfully set a hawkish tone for the US dollar ahead of other key data like the upcoming non-farm payrolls. I will talk more about the non-farm payroll in a second. The price action in Euro USD falling post-release is a clear testament of the forex market's focus on the Fed inflation mandate. Forex traders who acted on the initial headline beat alone would have been caught on the wrong side of the move, underscoring the critical importance of analyzing the PMI subcomponents, especially the prices paid index for true direction. The next one is the non-farm employment change related to USA. Now, what is non-farm employment change, also known as NFP? The non-farm unemployment and the non-farm employment change data report, also known as NFP or non-farm payrolls data report, is an economic indicator that measures the change in the number of paid workers in the USA, excluding farm workers, government employees, and employees of non-profit organizations. It is released monthly by the US Bureau of Labor Statistics, BLS, and is a key financial indicator of the US labor market's health. Now, the previous number was 22K. The forecast was 52K. The report cancelled due to US government shutdown. Now, the pair in focus is the Euro USD. So markets were on high alert for the key economic release of the week, the US jobs report scheduled for the Friday, October 3rd at 12:30 p.m. UTC time. However, forex traders were met with an unprecedented situation. the official cancellation of the financial data report due to the ongoing USA government shutdown. This left the forex market in a data vacuum, forcing it to trade on uncertainty and shifting expectations. The unprecedented event and a data blackout, people were not expecting that to happen. So, in a highly unusual turn of financial events, the Bureau of Labor Statistics did not release the non-farm payrolls report as scheduled. The official reason is in the lapse in federal government funding. This created an immediate information void, removing the single most important data point for assessing the USA's labor market's health. The market was left with only the previous month's soft 22K print and speculation about the current state of the economy. Now let me decode the price action. Here's a chart of euro dollar currency pair. Let me zoom in a little bit. The uncertainty favors the dollar's bears, and what happened is that we got a bearish candlestick close over here on October 2nd, but on October 3rd, we got a bullish rally. Okay, so US dollar showed signs of weakness on October 3rd, but after that, market is falling down and US dollar is actually showing strength overall. Okay, so the price action of Euro USD moved higher. Okay, initially, and then we got a drop in price in coming trading days. Okay, with no data to digest, the actual report got cancelled. The forex market traded on the uncertainty and the implicit negative signal of the shutdown. The inability to confirm a forecasted rebound in jobs 52K led to a sell-off in the US dollar first, and then we got a drop in price in euro dollar currency pair. So this caused the euro USD to rally first, and after that, forex market participant started selling the euro USD, and this means if euro USD is dropping, then expect a strength in US dollar. Okay. So the cancellation of the NFP report was in itself a significant market event. It removed the Fed primary compass for labor market policy and injected a heavy dose of political risk into financial markets. The scenario that played out, the data blackout, euro bullish and US dollar bearish. The forex market interpreted the lack of data and the cause of the cancellation as net negatives for the US economic outlook. This led to a decline in US Treasury yields and a weaker US dollar initially. But after that, you've seen that the euro dollar started the drop. So the United States dollar actually becoming strong over here. Okay. So the conclusion is the event underscores that sometimes the absence of data can be more powerful than the financial data itself. The rally in Euro USD reflects a market pricing in heightened uncertainty and a potential dovish shift from the Fed. The focus now shifts entirely to the duration of the government shutdown and any commentary from the Fed officials on how this political impasse affect their US economic outlook and policy trajectory. Until the US government shutdown is resolved and data flows resume, the US dollar will likely remain under a cloud of uncertainty, and we might get overall sideways price action in euro dollar currency pair. Next, let's discuss the previous week global market trends. First one is the euro dollar, second one is the US dollar Swiss franc currency pair. Okay, so let me take a look at euro USD currency pair. So right now, if I zoom out a little bit, go over to a weekly chart, You can see we got this nice bullish trend inside euro dollar currency pair, which is showing us a nice uptrend in euro USD. Now this is the weekly chart. Let's go over to a daily. Now inside a daily time frame, here's a nice bullish trend line over here, and so far market is trying to test this bullish trend line. So to me, the trend is still up inside euro dollar currency pair daily time frame. However, if you take a look at 4-hour chart, okay, and you see, let me draw a trend line over here. You see price action is trying to drop over here. Let me adjust this trend line and change the trend line color as well. So this is the Euro USD in 4-hour, and it seems to me price action is falling down in a 4-hour time frame. Okay, so we might get further weakness in price action, especially in a 4-hour chart. Now, next one is the US dollar Swiss franc. The US dollar Swiss franc shows us a nice downtrend, and you can notice it with the help of this bearish downward sloping trend line. Now, next one is the daily. Inside daily time frame, you can see we're getting kind of a bullish breakout over here. This could turn into a failed breakout as well. However, in 4-hour time frame, the US dollar Swiss franc is showing us a nice bullish trend over here. Okay, price action is just printing higher swing highs and higher swing lows, so we might get further upside in US dollar Swiss franc currency pair. Now let me talk about the current week macroeconomic events and financial data releases. I'm going to discuss the official cash rate related to New Zealand dollar, and then I'm also going to discuss the unemployment rate related to Canada. So these are the dates and time written over here. Let's start with the first one. Okay, official cash rate, also known as OCR. What is the official cash rate or OCR? The official cash rate, also known as OCR, is the interest rate set by the Reserve Bank of New Zealand, RBNZ, that's a short name, to influence short-term interest rates and control inflation within the economy. It serves as the primary instrument of monetary policy, guiding the cost of credit throughout the financial system. Changes to the OCR directly affect borrowing and lending forex rates, thereby impacting consumer spending, business investment, and the overall economic climate. The Reserve Bank of New Zealand adjusts the OCR to manage inflation and economic growth. An increase in the OCR usually aims to curb inflation by raising borrowing costs, while a decrease can stimulate economic activity by lowering borrowing costs. Now, on October 8th, 2025, we are going to get the financial data report. The previous number we got was 3%. The forecast is 2.75%. The actual data is going to be released on October 8th. So right now, the financial data has not released yet. So all eyes are on the Reserve Bank of New Zealand this Wednesday, October 8th, for its pivotal official cash rate decision, with forex markets widely forecasting a 25 basis point cut to 2.75%. This meeting is seen as a critical test for the Reserve Bank of New Zealand's confidence in the inflation outlook. The accompanying monetary policy statement and press conference will be just as crucial as the rate decision itself, setting the tone for the New Zealand dollar. The dovish point in focus is the Reserve Bank of New Zealand is widely expected to begin its easing cycle with a cut from 3% to 2.75% fully priced in. The key question for traders is not if they will cut, but what they signal next. A dovish rate cut, one accompanied by guidance suggesting more easing is imminent, and that would be negative for the New Zealand dollar. Conversely, a hawkish rate cut that emphasizes data dependency and suggests this could be a one-off move would likely provide support for the Kiwi. Beyond the headline rate, the statement and projections are the market's reaction will hinge entirely on the nuance of the Reserve Bank of New Zealand's communication. So, forex traders must scrutinize two key elements. The number one is the official cash rate, the OCR track, the projected path of future interest rates in the Reserve Bank of New Zealand's primary forward guidance tool. A downward revision to the track would be a strong dovish signal. The second one is the inflation and growth forecast. Any significant downgrades to the economic outlook would reinforce the case for a prolonged would prolonged easing cycle, putting further pressure on the New Zealand dollar. So the potential market impact that you could expect on New Zealand dollar versus United States dollar is if the Reserve Bank of New Zealand is more dovish than expected, like for instance, we're expecting a 25 basis cut. Instead of that, it actually uh, cuts up to 50 basis point, or provides an explicit guidance for more rate cuts. A larger than expected rate cut on a clear signal that this is the first in a series would be a profound negative for the New Zealand dollar. This would trigger a sharp repricing of future interest rate expectations, sending NZD USD significantly lower. Now, if you check out the chart of NZD USD currency pair, let me show you the chart. Go over here. This is the NZD USD weekly time frame. Loading the data. And if I zoom out a little bit, this is the weekly chart. So you can easily notice that inside a weekly time frame of New Zealand dollar versus United States dollar currency pair, overall, the trend is down. It's a bearish trend. Okay. And let me show you the daily chart. The daily chart is also showing some signs of weakness over here. Okay. Let's go back to the PowerPoint. If the Reserve Bank of New Zealand is more hawkish than expected, for example, hold the rates at 3% or a cut with a hawkish bias, you know, this would be most bullish scenario for the Kiwi, and that would be a surprise hold, which would send NZD USD soaring as it would completely defy forex market pricing. Alternatively, a 25 basis cut paired with an upwardly revised OCR track and rhetoric downplaying the need for further easing would also be interpreted as hawkish, likely fueling a sustained NZD rally. So the overall analysis and key scenario is the market is positioned for a dovish outcome, creating an asymmetric risk profile. A confirmation of dovishness may see a limited priced in. The NZD sell-off, while any hint of hawkishness could spark a powerful short squeeze in the forex market. The dovish delivery scenario cut to 2.75 with soft guidance is that the NZD USD becomes bearish and confirms the easing cycle is on, but the forex market reaction may be muted unless it's exceptionally dovish. The hawkish surprise scenario would be hold the OCR rate at 3% or cut with the firm stance. The NZD again becomes bullish in this scenario. And this would catch the forex market heavily offsides, leading to a sharp and rapid NZD appreciation. So the conclusion is the Reserve Bank of New Zealand meeting is all about forward guidance. The actual rate decision is almost secondary to the tone the central bank strikes. Forex traders should be prepared for heightened volatility, not just at 12:30 p.m. UTC time announcement, but throughout the subsequent press conference. The key trading insight is that with a rate cut largely expected, the risks are tilted towards a potential New Zealand dollar rebound if the Reserve Bank of New Zealand fails to deliver the explicitly dovish message the forex market is positioned for. The most significant move will come from a deviation from the expected narrative, not from the expected rate cut itself. Next, let us take a look at current week's global market trends. So first one is the Euro USD. Let's go over to a chart of Euro dollar. The Euro USD, the trend looks bullish in weekly. It also looks bullish in 4 hour, but in also looks bullish in daily, but it looks bearish in a 4 hour time frame of Euro dollar currency pair. Okay. Next one is the US dollar Swiss franc. Okay. US dollar Swiss franc, the trend looks down over here in weekly. In daily time frame, market is trying to show some signs of a bullish breakout over here, and the 4 hour is clearly showing us a nice uptrend. Next one is the British pound GBPUSD currency pair. Okay, GBPUSD currency pair, if you take a look at a weekly chart over here, the trend is clearly up over here. If you check out the daily, still it's a nice uptrend going on inside pound versus United States dollar currency pair. And if you check out the 4 hour time frame, the 4 hour time frame is showing some signs of weakness. Okay. Next one is the spot gold. Spot gold trend is bullish. And if you go with, this is the weekly chart, then go over to a daily, same story. Inside daily time frame, the trend is up over here. You can notice it with the help of this bullish trend line over here. If you go to a 4 hour time frame, same story. Price action just keep printing higher swing highs and higher swing lows. So it's a nice uptrend going on inside spot gold XAUUSD currency pair. The trend looks XAUUSD, the spot gold, the trend looks bullish, and I expect more upside. Okay, if you have any questions or comments, feel free to type inside the chat box and I will be happy to answer your questions. So let us review what you have learned today. Well, we discussed about the official cash rate OCR related to New Zealand, and we also looked at the unemployment rate related to Canada, USD CAD. Okay, what you should do next? Stay tuned for the schedule of next week's trading webinar. Subscribe to our social media pages to stay updated with true exciting events, trading content, and market insights. And if you want to learn more about trading, visit TradeGeek and access free trading courses for beginners, intermediate, and expert traders. Thank you for hanging around. See you at the next trading webinar on Tuesday, October 14, 2025 at 12 p.m. UTC time.